See this question. We have completed straight line method and there were many transactions like purchase of asset, sale of asset, how to record the loss and profit on sale of asset, how to calculate that loss or profit, how to prepare that working note. Now we are doing written down value method, or you can say reducing balance method. Question is saying Rohini Cement Limited purchased on 1st April 2015 a plant for rupees 80,000. On 1st July 2016, it purchased additional plant costing rupees 48,000. On 1st December 2017, the plant purchased on 1st April 15 was sold off for rupees 42,000. And on the same date, fresh plant was purchased at the cost of rupees 75,000. So various purchases and sales of plant and machinery has been given. Depreciation is provided at 10% per annum on diminishing balance method. So method is clearly mentioned in the question. Every year, accounts are closed each year on 31st March. Show the plant account for 3 years. So we have to prepare the plant account for 3 years. And IGST is charged at the rate of 12% on purchase and sale of plant. So IGST is always kept separate. It is not part of the cost of the asset. Whenever you are purchasing any asset, you will be paying IGST that will be debited in input IGST account. And if you are selling your asset, at that time you are charging IGST, then it will be credited to output IGST account. So that's why it will never come in plant account. It will not affect your entries. One more thing which I want to tell you here, that whether the method is straight line method or WDV method or diminishing balance method, the entries will remain same. Entries will not change because of the method. Only the method of calculating depreciation will get changed. Now see, the year is 2015. The first machinery is purchased on April 1st. The entry will be plant account debit to bank account. And the amount will be 80,000. On 1st July 2016, now I have to decide whether this 1st July 2016 will be in this year only or in the next year. So you decide and tell me. Whether this 1st July 2016 will be in the financial year 15-16 or 16-17. So you can see that our year will start from 1st April 2015, and on what date it will end. You tell me the last date of this year 15-16. Yes, 31st March 2015. No, sorry, 16. No, 31st March 2016. So 1st July 2016 will come after 31st March 2016, or it will come before 31st March 2016. Yes. So 1st July 2016 will come after 31st March 2016. So obviously this transaction will be recorded in next financial year, that is 16-17. So this is the way to decide. First decide the ending date of your year and then try to relate it that whether it is in this financial year or next financial year. So as far as this question is concerned, in 2015-16 there is no more transition. So we will directly reach to the March 31st and we will charge the depreciation by depreciation account. And the rate of depreciation is given 10% per annum. So we can show in working notes. Depreciation on plant purchased on April 1, 2015. So the cost is 80,000 multiplied by 10% per annum. Because 1 year you have used, you are charging depreciation for 1 year. You have used this plant for 1 year. April 1 to 31st March you have used. That's why we will charge depreciation for one complete year and it will be rupees 8,000. So here I will be charging depreciation rupees 8,000. Now I will calculate the balance by balance carried down. 80,000 minus 8,000. So the balance will be 72,000. Now we will come in the year 2016-17. On April 1, first we will write the opening balance to balance brought down and the balance is 72,000. Now we will see the transaction. On 1st July 2016, it purchased additional plant. So on July 1st, we will record the purchase. July 1 to bank account and the amount is 48,000. So now we have two plants on 1st December 2017. Now this date will be just after 31st March 2017. So obviously this is not a transaction of this current year 16-17. It will be recorded in the next year. So there is again no more transaction in this year. We will again reach to 2017 March 31st and we will record the depreciation on these two plants by depreciation account. And because two plants are there, so that's why we will show the depreciations separately. Now for first plant, because it is written down value method, and now the written down value of this first plant is 72,000. So we will be calculating depreciation on 72,000 now. So its second depreciation will be 72,000 multiplied by 10%, 7,200. So first plant depreciation will be 7,200. Then second plant depreciation will be how much? Now we will make a separate working note for that. Depreciation on plant purchased on July 1, 2016. Cost is 48,000 multiplied by 10%. The rate of depreciation is 10%, but because we have used this plant in this current year from July 1st to 31st March, so that's why we have used this plant only for 9 months. July, August, September, October, November, December, January, February, and March. So the time period will be 9 months. So we will calculate depreciation for 9 months only in the first year. So it will be 4,800 multiplied by 3 upon 4, and it will be 3,600. So now we have got both depreciation, we will add them up. And it will become 10,800. Now we will calculate the balances by, sorry, March 31st by balance carried down, and balance will also be calculated separately for first plant as well as second plant. So first plant balance will be 72,000 minus 7,200. So it will be 64,800. 64,800. And for second plant, the balance will be 48,000 minus 3,600. So 48,000 minus 3,000, 45,000 minus 600, 44,400. 44,400. Again, this will also be added, and the total will be 0, 0, 8412, then 1, 41549, and 6410. 0, 1,09,200. So we have calculated the closing balances. Now we will add the debit side and credit side, and the total should be equal. So 72 plus 880 plus 4, 1,20,000. Debit side total is coming 1,20,000. And the credit side total 1,09,200, 1,10,000. It is also coming 1,20,000. this will make you sure that you are calculating almost correct. Now we will come in the year 2017-18, April 1st, and we will first note down the opening balances. To balance brought down, and we will write down the opening balances here. Now we will see whether what transaction has been done in 2017-18. You will find it is saying on 1st December 2017, the plant purchased on 1st April 2015 was sold off for rupees 42,000. So you have sold off the plant. So first you will record this entry 2017. The date is December 1 by bank account, and the amount of sale is 42,000. Now because we have used this plant, first plant, from April 1 to December 1, so we have to charge depreciation also on this plant for this time period by depreciation account. Now the new written down value of this plant is 64,800. So we will calculate depreciation. 64,800 multiplied by 10 upon 100 multiplied by, because now the time of use is April 1 to December 1. So how many months it will be? Can you tell? Let's see how many of you can answer it correctly. See, it is not a question of still and method, so that's why depreciation will not remain same, first thing. And the time period will be April 1 to December 1. So April, May, June, July, August, September, October, November. Till 30th November you have to count, because December 1 you have sold the machine. So December will not be counted. So it will be time of 8 months. So we have to calculate depreciation here for 8 months. So it will be 6,480 multiplied by 2 upon 3. Now if I divide it by 3, it will become 3 to the 6, 3 ones are 3, 3 6 are 18, 2160 multiplied by 2, and it will be 4,000 and 220, 320, sorry. So 4,320. This will be the depreciation charge on this machinery, 4,320. Now by we have to calculate the profit and loss. So for that we have to make the working note. Calculation of profit or loss on sale of plant on 1st December 2017. Original cost of plant on April 1st, 2015, it was 80,000. Then the depreciation charged in 1516, then on 1617 and 1718. The first year depreciation charge is 8,000. Then the second year depreciation charge is 7,200. This all is mentioned in your working notes also. So that's why you will be comfortable with it. You are giving explanation of each and everything. Third year depreciation we have calculated 4,320. So this way the total depreciation charge will be 15,200, 19,200 and 19,520. 19,520. So the written down value on December 1, 2017 will be 80,000 minus 19,000. We will subtract 20,000, it will become 60,000. 60,400. It should be 60,480. Let me check it. 10 minus 2, 8. 9 minus 5, 4. 9 minus 9, 0. 7 minus 1. Yes. So this will be a written down value on December 1, 2017. Now the sale value of plant. We will use the word plant because it. So sale value is 48,000. Sorry, 42 or 48? 42. 42. Then written down value on December 1, 2017. It is 60,480. So ultimately we are having loss on sale of plant. Now it will be 60,480. So 480 will come here. Then 10 minus 2, 8. And 5 minus 4, 1. It should be 18,480. So now I will write this amount here, 18,480. So this way you should give always proper working notes in your answers. Each and everything, each and every calculation for depreciation, for losses, for each and everything, it should be clearly mentioned. Now we have done one more transaction in this year, and on the same date fresh plant was purchased at the cost of rupees 75,000. So we will record a purchase also December 1 to bank account 75,000. Now again we have got by statement of profit and loss. So now we will go to March 31st, 2017. by depreciation account. We will charge depreciation on the remaining plant. And now we have, out of these three plants, we have sold this one. So we have this one and this one, two plants we have. Again, we will be carrying depreciation separately for these two. For this plant, I will be showing it here. The written down value is 44,400. And now this plant has been used for one complete year, multiplied by 10%. So this depreciation will be 4,440. And for the next new plant, we will be making a working note, new working note. Depreciation on plant purchased on December 1, 2017. So its cost is 75,000 multiplied by 10% multiplied by time. So December, January, February and March. 4 months have been used. 4 by 12. So it will be 7,500 multiplied by 1 upon 3, and this will be equal to 2,500. So in this year we will be charging depreciation 4,440 and 2,500. So the total amount of depreciation charge is 6,940. 6,940. Now we will calculate the balances. March 31 by balance carried down. So for first machine, for first plant, the balance will be 44,400 minus 4,440. So 44,400 minus 4,000, or we can deduct 4,400. So it will become 40,000 and then minus 40, 39,960. So the first plant balance will be 39,960. Then second is 75,000 minus 2,500. So it will be 72,500.